Time for the Crypto Corner. As we were covering earlier today, the Federal Reserve held its bi-monthly meeting today with Chairman Jerome Powell announcing the Fed's decision to keep interest rates unchanged. In his speech today, Powell also hinted at the future possibility of rate cuts later in the year. They're still trying to get the inflation rate to their target of 2%.
That's right. A little bit. And what could be positive news for crypto investors? The central bank also signaled an end to its current quantitative tightening policy. Now, the shift would allow more money to be printed, increasing liquidity in the financial system, potentially benefiting Bitcoin and other crypto assets.
Joining us now to weigh in, partner and co-founder at Flynn Zito Capital Management, Doug Flynn, plus crypto educator and the host of the Daily Zest with Randi Hipper. Randi Hipper, good to see you both. Randi, I want to start with you. Could this be good for crypto, everything that you heard today?
Absolutely. And we have to remember that Bitcoin is meant to separate money from states. And the more they print fiat currency like the dollar, the better for Bitcoin, just showing the more dollars are out there, the more you want something that has a finite supply. And remember, Bitcoin only has 21 million that will ever exist. And the states know that. And that's why the states even want to invest in it.
Doug, what do you think? What's your read here?
Yeah, I think no news is good news with the Fed. Cutting, because this Bitcoin and other crypto is a risk asset. Risk on comes in when you're going to get the Fed cutting and sort of the animal spirits rising again in the market, which kind of have waned a bit. And so if they're tightening, not good news for crypto because it's more of a risk off situation. But so it's sort of nowhere right now, but we're looking down the road 6 months, get on the other side of the tariff issue in April, and maybe you could see that risk on trade and lowering interest rates. And then that's a big plus for Bitcoin and other crypto for sure.
Randi, it sounds like to me that one of your favorite things to protect against inflation is cryptocurrency.
Absolutely. Again, we need something with a finite supply and something we own. Even senators from different states are saying that Bitcoin is a way to have and protect people financially because we're just printing our money away and devaluing something that people work their entire lives for. Why don't we actually want an asset in our portfolios that, again, is finite, we actually own, and no one can take away or devalue?
Tell me, Doug, about what this quantitative tightening is. We mentioned what it can do, but what is it? And again, remind us why it's so important for that to be ending.
Yeah, so I mean that started in April of like 2022, where they started tightening, and that's to reduce liquidity in the economy, and that's to kind of tamp down inflation. So as inflation is waning, and they're getting closer to the goal of it being 2%, whether that's a year or two from now, they don't need to do that as much. They can sort of stop doing that. They don't need to ease, which would push money into the system. That could cause inflation, and you do that when things are slowing. So we're just slowing down the tightening, and that's a good thing. And then let's get away from that. The one thing I will say about the inflation hedge of Bitcoin, gold and Bitcoin are acting sort of inversely right now. You're seeing gold at all-time highs, and Bitcoin has not reacted. It's quite a bit off its high. So it's not really acting like a hedge like you would want it to be. It's really more of a risk asset as of late. Now, maybe that comes back around later on, but right now it's not acting like the hedge that it maybe was at one time and maybe will again.
Randi, your thoughts on that, it not keeping up with gold?
Bitcoin is the best performing asset out of the last 15 years. And the one time Bitcoin is hitting highs when Bitcoin isn't, doesn't mean Bitcoin's not a hedge against inflation. I think it's the best hedge against inflation. Again, it has an actual finite supply when we don't really actually know the finite or capped amount of gold that will ever exist. It could continue being mined.
Final thoughts, Doug.
Yeah, I mean, look, all currencies and things like this aren't investments in the true sense of the word, from the standpoint of they don't have earnings. There's no profit per se. It's speculation and should be treated as such. And it definitely has a place in your portfolio, but you need to invest accordingly like that because, you know, it's not like it's going to sell anything to somebody else and create some earnings. It's just you hope that down the line you can give it to somebody else for a much higher price than you have right now.
All right. Very good advice from both of you, Doug and Randi. Thank you.
Thank you.
And stay with us because the second hour of American